How do you negotiate a fully diluted clause from the founder's perspective? In another video, we explained how to negotiate a fully diluted clause from the investor's perspective. Now we will do it from the founder's perspective. First, founders aim to minimize the dilution of their ownership and maximize their return upon an exit, especially if they are partners without specific rights. Their focus on fully diluted is to limit the impact of the option pool and other dilutive instruments, and to negotiate terms that balance investors' interests with their own. What are the key objectives? First, they should reduce or defer the option pool. A large option pool dilutes founders on a fully diluted basis. Founders will try to negotiate a smaller option pool or postpone its creation or expansion until after the round, post-money, so that investors share the dilution. Second, the strategy is to propose an option pool of 10% instead of the typical 15 to 20%, or to negotiate that part of the option pool be reserved post-money. Third, they must limit dilutive instruments. Founders should negotiate that convertible notes, warrants, or safes have clear conversion terms to prevent them from disproportionately inflating the fully diluted base upon an exit. For all these reasons, they should try to include a cap on the conversion of convertible securities. For example, a valuation cap in a safe to limit how many shares are issued. For example, a safe with a valuation cap of $30 million ensures that holders do not receive excessive ownership on a fully diluted basis. Fourth, they must negotiate favorable liquidation preferences. Founders prefer non-participating liquidation preferences or capped participating to maximize their position in divestments. They can also negotiate that the investor's pro rata share in a participating preference be calculated on a fully diluted basis, reducing its impact if the option pool is large. What negotiation tactics do we recommend? Transparency in the cap table. Present a detailed cap table showing the fully diluted impact before the round to negotiate from an informed position. Balancing the option pool. Suggest an option pool that is sufficient to attract talent, for example, 10%, but not excessive, and negotiate that investors assume part of the post-money dilution. Legal advice. Hire a lawyer specializing in mergers and acquisitions to review the term sheet and ensure that the definitions of fully diluted and pro rata calculations are clear and fair. Focus your queries and challenge our AI Atenea. Complex questions, expert answers. More information at ilpabogados.com.